Today, semiconductor giant TSMC, Taiwan semiconductor manufacturing company, released its first quarter financial report, and the stock price rose slightly. TSMC's revenue in the first quarter was $16.72 billion, a decrease of 16% compared to the previous quarter and a decrease of 5% year-on-year, slightly below the analyst's expectation of $17 billion. Earnings per share were $1.31, a decrease of 30% compared to the previous quarter but an increase of 2% year-on-year, higher than the analyst's expectation of $1.21. Gross margin was 56.3%, an increase of 0.7 percentage points compared to the same period last year, but a decrease of 5.9 percentage points compared to the previous quarter. The company stated that the decline in revenue was due to weak macro environment, continued softening of end consumer demand, and customer inventory adjustments. In terms of revenue composition, the gross margin of the 5 nanometer and 7 nanometer segments, which had the highest gross margin, declined slightly, with the revenue share declining by 1 to 2% compared to the previous quarter, putting pressure on gross margin. The company explained that the decline in gross margin also included decreased capacity utilization, weak customer demand, and currency impact. In terms of application platforms, almost all platforms declined, except for the automotive segment, which increased by 5% compared to the previous quarter. In terms of guidance, the company expects revenue for the next quarter to be between $15.2 billion and $16 billion, slightly lower than the analyst's expectation of $16.1 billion. Gross margin is expected to be between 52% and 54%, in line with expectations. The CEO stated in the financial report conference that he believes the current second quarter is the bottom of the cycle. While the smartphone and PC markets are still weak, they are stabilizing, and a rebound is expected in the second half of the year. Considering this expectation, the company maintains its capital expenditure plan for this year, which will spend about $36 billion to upgrade and expand production capacity,